This episode, as with all episodes, exists thanks to the supporters of the show who contribute a mere $3 per month via patreon.com/copytradersclub. You can too. It takes 2 minutes to sign up and you probably won't feel it. What you will feel is a warm, fuzzy feeling of helping out a little independent podcaster who creates a show you enjoy and get value from. Patreon.com/copytradersclub. Thanks for listening and thanks for your support. Copy Traders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin McCauley, my name and username on eToro. Today, we talk to a PI who has seen it all on eToro, all the highs and lows, and all the drama in between. Here we go. Episode 19 of the Copytraders Club podcast, and as always, my aim as an eToro enthusiast and copy trader is to demystify this new and uncharted world of copy trading, understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. In chats like today's, the aim is to answer all your questions about this popular investor, and reveal more about them than anywhere else, so you can assess whether they might suit you. In this episode, we talk to Wayne Gummer, aka waynewes, who has enjoyed triple-digit years and praise as a genius, plus big losses and being the subject of derision. Who better to talk to than someone who has truly ridden the eToro roller coaster? I hope the limousine ride to the Copy Traders Clubhouse was considerably more sedate. Here he comes. Wayne, hello. Welcome to Copy Traders Club.
Hi, thanks for the welcome.
Well, thanks for being here. And as you know, in order to get into the inner sanctum of the Copy Traders Clubhouse, you've got to get past security via a series of quickfire questions. Ready for those?
Absolutely.
Username on eToro.
waynewes.
Date you joined eToro.
The 9th of April 2018.
Date you became a popular investor.
February 2020.
Year of birth.
1984.
Place of residence.
Ipswich in the UK.
Profession.
Internet retailer.
Briefly state what you aim to achieve on eToro.
To become the best investor on eToro.
Name one of your investing heroes.
Warren Buffett.
Name one of your favourite investing books.
What I Learned Losing $1 Million by Brandon Moyner.
That completes the formalities. Let's proceed into the VIP section here at the Clubhouse, the wonderful Copy Traders Lounge. Wayne Gummer, aka waynewes, are you ready for this magical transition?
Absolutely.
Wayne, here we are now in the Copy Traders Lounge. You put your feet up and relax. Can I get you a drink?
Oh, a cup of tea would be lovely, thank you.
Cup of tea. We have a bar full of every drink. It's only limited by your imagination. But a cup of tea it is, if that's what you fancy.
It's always going to be tea, no matter what.
2 cups of tea. Thank you. Okay, so Wayne, here we are in the week that, I don't know about you, but I've had a lot of Depeche Mode playing this week to mark the death of Andy Fletcher. Are you familiar with the music of Depeche Mode?
I'm not actually, no, sorry.
Ah, well, they were a very important band in my youth. And the live performance of Never Let Me Down Again in Pasadena as part of the 101 documentary gives me chills to this day. So I thought I would link to that in the show notes for the listener, just to share a bit of musical history. What did you grow up listening to, Wayne?
So me, I think it was more soft rock stuff like Meatloaf and Bon Jovi, that kind of thing.
Well, Meatloaf passed away not long ago, and somebody from Bon Jovi has just died also.
I didn't know about the Bon Jovi. Obviously, I knew about Meatloaf. Yeah.
One of the original members, apparently.
All right.
But let's not dwell too much on such matters. Let's move on. Wayne Gummer, aka waynewes. Where does the Wes bit come from?
So my middle name is Wellesley, and years ago when trying to come up with any kind of email address or login name for anything, obviously Wayne is always, or anyone's first name is always gone. So you either end up with a username that's your name and then a random combination of numbers or letters. So I just came up with Wes because it just seemed like the easiest fit and something that nobody else ever has. And so it's a username that's just followed me over the years.
I don't know if you know Moth Copy Trading, but Stephen from Moth Copy Trading, he calls you waynewes, as if the EWES signifies female sheep.
Oh, right. Okay.
There's a strange reading of it. Okay, so Wayne, after being in the British Army and the Metropolitan Police, you decided to leave the forces of darkness and focus on your own e-commerce company.
That's right, yeah.
Tell us about your online business.
So it's quite niche. I basically sell medically themed gifts. If you can get your mind around it, that's so it's like syringe-shaped pens, doctor-shaped flash drives, random kind of stationery and mugs and stuff like that. That's pretty much only got a home on websites like Amazon because of the fact that it's so niche. We also stock a number of medical museums mostly around the UK actually now, and that's it.
Wow, that's an interesting niche. How did you find yourself there?
So I started off just kind of selling random stuff on eBay, buying and selling stuff on eBay, and it made me a few quid, and then I was like, right, so I need to find something a little bit more sustainable. So I went onto the website Alibaba, and this is talking about back in 2010 sort of time, and through speaking to people on Alibaba, I then moved over to their website called AliExpress, which is kind of like the customer-facing version of Alibaba. And I ended up buying like a few random things, like some just plain USBs and bits and pieces to sell on to eBay. And while I was sort of perusing through, I found some products that were like syringe-shaped pens. And my wife at the time, she is my wife, but at the time she was a nurse. So I was like, oh, like, what do you think of these? And she was like, oh, they look really good. So yeah, so I bought them, and they were instantly my the best selling product. So I, from there, started to find other similar products that would go to the same customers. And I then started to create packaging and branding around that product, and then started to create some of my own products. And it kind of just expanded from there. So it was finding that one product that sold particularly well and creating like a brand around it as such.
Well, can we put a link in the show notes to your product range as well?
Yeah, absolutely. I can send you a link to the Amazon shop. Is probably the best way to get to the products directly.
Okay, good stuff. I'll take a 10% commission. Fair enough.
I think if you've got an Amazon referral link, they'll give you that commission anyway. So
Okay. All right. So how did I come across you? The common answer is the Felix Falix YouTube channel.
Yeah.
And you've had quite a journey on his channel. he's gone from being a big fan and admirer of your stock picking skills to towards the other end of the scale, shall we say?
Yeah.
More recently. But you were one of the very first people he reviewed.
Yes, yeah, second one after J Nemesis.
A lofty company.
Yes, yeah.
Okay, so let's get to know you, Wayne, a little bit better. When I ask the question, tell us something you're very bad at.
I think communication is probably the standout thing.
Well, I don't mean on eToro necessarily, just like in life.
Oh, yeah, I mean, even in life, you ask my wife, she'll tell you the same.
Well, I've seen your videos. You're very good on YouTube.
So I seem to be fine at talking to people directly, but what I'm not necessarily so great at is explaining myself to the right extent. Often I can either talk a lot without making a lot of sense, or I can say something and what I'm trying to kind of convey can come across. It can be very different to the message that is actually received. So, like, I could be saying, turn right, and what people are hearing is turn left.
Well, let's see if that crops up during our conversation. That'll be interesting.
So, yeah, that's absolutely what I would say is my biggest struggle.
Okay, and let's have a question from the art of people. Can you pick a number between 1 and 10?
Oh, let's go with lucky number 7.
It's always lucky number 7. If you weren't doing what you're doing today, what would you be doing and why?
A little bit more clarification on what you mean with the question. Do you mean as in if I wasn't investing on eToro, or as in if I wasn't sat here talking to you?
Well, what I like to think this question is you go back to 6-year-old Wayne and you can do anything you want. The world is your oyster. It'll all work out beautifully. What would you have been in an alternative life?
I mean, ironically, if I'd spoken to 6-year-old me and I could go back, I'd probably do what I'm doing now sooner, rather than taking so long to get here. But I think 6-year-old me would most likely be in a circus as a clown, or as a stand-up comedian of some form, because that's what I always used to love to do, was making people laugh.
Have you ever done any stand-up open mic nights or anything?
No. I don't seem to be that great at telling jokes and making people laugh. It's
that can be a problem for a stand-up comedian.
Exactly, yeah. So I'm great with kids. I can make kids laugh, but when it comes to actually telling jokes and being in a group as such, it's not so easy.
Okay, maybe you could also just tell the listener what I'm looking at in terms of what kind of headphones you've got on as you tell me this.
Okay, yeah. So obviously, I'm wearing my daughter's pink headphones with little cat ears on the top to try and stop the bounce back from the audio from my TV. So
and very fetching they are too.
Thank you. That's the look I was going for.
Okay, Wayne, let's turn our attention to your eToro profile. Have a little look at your bio.
Yeah.
Before we do, the first line of your pin post, I had a little note to comment on. It says, if you're looking for an investor, like everyone else, then keep looking. This is not the investor you're looking for. I could think that could do with a little tweak of drafting, because when I first read that, it sounded like, if you, like everyone else, are looking for an investor, then keep looking. What you obviously mean is, if you're looking for an investor who is like everyone else, then keep looking, because I'm unique.
Yeah, absolutely. Thanks.
Okay.
A classic of the that communication problem I was talking about just a
There
moment
you
ago.
go. There you go. Okay, so can you read from your bio just the little bit that starts my aim?
Okay, yep. So my aim is to beat all of the indices and have the best returns of any other PI. My target is a minimum of 100% growth per annum. This is a target and should not be expected. The portfolio is built for this target, but market conditions and many other things will dictate the return.
Okay, that's very interesting. I highlighted little bits of those sentences. Your aim is to beat all the indices. That's a big shout. You're aiming for the best returns of any PI, another big shout. And your target is a minimum 100% growth per annum. I know you then go on to say these are just targets, but why declare such an impossible target?
So for me, that target is, first of all, you should always have, in a way, unrealistic targets, because if you don't set yourself a standard of something that's almost impossible, you're never going to reach the impossible. So for me, first of all, that pure thing of, your target should be something that you feel is really pushing yourself. The second thing is the fact that that target is to, for me to, obviously, like I say, I've got to, my aim is to be the best investor. It's to beat all the other PIs, and it's to beat all the indices. The thing is, obviously, if you're not beating the indices as a PI, you're not doing your job, as far as I'm concerned. Obviously, there are times when that isn't the case. Obviously, if there's a PI that's got a lower risk score than the indice, they're looking for lower volatility, or whatever other reason that you would have. But for the majority of PIs, if you're not beating the indices, you're not doing your job, as far as I'm concerned. And therefore, obviously, beating the indices is like a no-brainer of what I should be doing. And beating the other PIs, again, for me, if you can copy someone like, say, for example, J Nemesis, or another PI that's doing better than me, then in my opinion, you should be copying them. You shouldn't be copying me. Therefore, if I'm not beating the other PIs, I shouldn't be a PI. Does that make sense?
I understand what you're saying. Sure.
And then regarding the 100%, again, the 100% is very much a case of, I'm purely picking stocks that I think can get me that level of return. If I don't think that the stock that I'm picking can get that level of return, then I will be avoiding that stock. So, for example, if I think, this is a particularly good stock and it's going to grow 50% this year, then chances are I'm going to avoid that and focus on another stock that I think has got higher potential. So that's what that is supposed to mean. Does that explain the question?
It does. What you're saying is we shoot for the moon to land at the stars, or words to that effect. Yeah?
Yes, yeah.
So while we're shooting for the moon, then my target within the next year is to sleep with a 25-year-old Monica Bellucci. Impossible, but, wouldn't it be amazing?
Well, the thing is, if that's your target and you never leave home, you're never going to reach that target, are you? But if you know that's where your target is, then you can at least be going into places where that person is likely to be, to increase your chances.
Okay. All right, let's have a look at your overall results. Just to give their listener an idea, you started in 2018, about 2/3 of the year, and that year resulted in a minus 94.48% result, which is something I see that you deal with also in your bio. You say that was your learning period.
Yeah, so basically up until around February 2019, the money that I had, this is bearing in mind, before this, I'd never been involved in the stock market. I'd never paid any attention to the stock market at all. I didn't even realize that eToro was a thing until when I joined in April 2018. And it was something I'd always wanted to be involved in the stock market. I'd always found business and stocks really, really interesting. But for me, it has always been something that was completely unattainable to be involved in the stock market. So when I found out about eToro in April 2018, the first thing I did was obviously put some money on and then start doing all sorts of random stuff that us as investors now are like, that is ridiculous. You're not supposed to do that kind of stuff, like trying to day trade on Amazon and using ridiculous leverage. And I think my favorite thing is the fact that I was the only person in 2018, I believe anyway, that was able to lose so much money, and pretty much most of those losses are from this one particular thing, and it was shorting Bitcoin while it was dropping. So obviously 2018, if anyone that was invested in Bitcoin lost a huge amount of money, I was short in Bitcoin and I still managed to lose pretty much all of my money. And that was largely why, is because I had no idea what I was doing, and I was like opening short positions at the bottom of every dip, and then despairing at what was going on. And it wasn't until about, like I say, it was February of 2019 when I looked at what I was doing and all the money I was losing, and I was like, but the thing is, I really enjoy being part of the stock market. I really enjoy investing. So I need to figure this out. And like previous to that, I'd been watching loads of videos about, watching the trading patterns and the head and shoulders and all of the different kind of indicators of when to invest and when not to invest. And I was like, this is clearly not working for me. It doesn't really seem to be working for other people. So I need to figure this out, and I need to work out how to do it properly so I can at least make some of my money back and continue to enjoy doing this. So it was at that stage then I started looking at other successful investors, people like Warren Buffett. And it was like understanding the fact that Warren has got so rich from finding a company that's going to do well and investing in them and holding that position rather than necessarily trying to kind of like catch every little kind of dip in the market. So that's where it started in March, was sort of looking and investing in that way. So with regards to that, I would say that my losses in 2018, they are significant to me and my portfolio, because of the fact that, I did lose all of that money, but the significance of it is more, it's proving to myself of how not to do investing, how not to be using the funds in that regard.
Okay, so then 2019, you had an excellent year, 118% return.
Yep.
Followed up by a phenomenal 2020, 275%. 2021, minus 19.33. And 2022, year to date, minus 35.32. So, as I said when I reached out to you to ask you if you wanted to be on the podcast, you're a guy who's experienced the ups and downs of being a PI.
Yeah.
You've had some very high highs and some low lows, and we're going to explore some of that as we go through your years on eToro. Now, your story is covered best, I think, in your words, in one of your videos called How Losing 95% of My Equity Helped Me to Become a Popular Investor on eToro. So it's mostly about your misadventures with Bitcoin that you touched on in 2018 and early 2019. And then 2019 became a story of avoiding leverage, avoiding Bitcoin, having a small number of high conviction stocks, which turned out to be great picks and did incredibly well, most notably Tesla, correct?
Yes, Tesla was probably one of the standout ones, yeah.
And then we move into the COVID era, and COVID began to appear as a threat. So you shorted a few positions, including Aston Martin with great success. Then you shorted some more companies, including Cineworld,
Yeah.
whose price popped back up again within 3 hours, losing you 50%.
Yes, yeah.
And a few others also went wrong. But overall, you had an amazing 2020, as we just mentioned.
Yes, yeah.
And then your story gets very interesting in 2021 with the video called August Personal and Portfolio Update, where you sold your whole portfolio in March 2021. And there were some accusations of panic selling. And in some quarters, you were derided as acting on the entertainer Jim Cramer's latest opinion.
Yes.
Tell us about that time, because that, I think, defines your more recent eToro experience.
Yeah, absolutely. So, I mean, the thing is, what I would say is, so I want to go back to 2020 and the COVID crash, because I think maybe that'll help explain things a little bit more. So there's pretty much whenever you get a crash, as you know, you normally get the denial blip, where the market starts to crash and then almost recovers, and then before it properly falls. And I am a complete sucker for the denial blip, and so it caught me with the COVID thing, and I was like, when the market recovered slightly, I'm sure I posted at that particular time, oh, the market's not crashing, it's going to be fine, and then obviously on a dime the market starts to fall, and I'm like, I was wrong, it's actually going to fall, we are crashing. So in, I think, February or March kind of time, the market was kind of iffy, and I think at one point I posted a video, something along the lines of, Jim Cramer's wrong, the market isn't going to crash, blah blah blah. So then when I posted another video afterwards saying about the fact that I believed the market was crashing, that was part of the reason why I had then gone, actually Cramer was right. And I think someone had kind of maybe misinterpreted, because they'd not read or sort of seen any of my previous posts, and therefore thought that it was just a one-off thing that I've watched Jim Cramer and gone. So that was purely the reason for mentioning him at that stage. And yeah, I mean, regarding that, it was a case of, as I posted at the time, I was looking at the market and I was seeing a crash. I was like, there's plenty of reasons for the price to tumble. There's plenty of reasons for the market to crash, and I'm seeing it in some of my stocks, but I'm not seeing it in everything, and I can't really understand why. So it's, at the time, it was like, it doesn't seem like a safe market to be invested in at this time, because I can't tell if the rest of the market's suddenly going to crash, or if the market's going to recover. And so for me, the safest option at that kind of point in the market is to go to cash, because a lot of the time you get people that sort of worry about missing the next big thing. And so they kind of rush in and they stick all their money on, whichever stock they think is going to be the next big thing. And in my opinion, although obviously if you're in the position and you're like, right, I think this is the next best thing, that's fine, but you shouldn't necessarily panic about catching that particular big thing, because another one will come along 5 minutes later.
Mm-hmm.
So with regards to the market, if you're facing uncertainty, a lot of the time that the best thing is to take your money out and go into cash, because of the fact that, worst case, you wait a month, the market doesn't crash, it's going to be fine, you put your money back in, and
that's really what happened, isn't it?
So yes, kind of. So yeah, so I took the funds out of the market, and yeah, I had a lot of criticism online, and I also had a lot of criticism from eToro themselves, who despite the fact that obviously it's what I'd done or I'd started shorting the market in February and of the previous year, and I sort of said in my bio about the fact that that I don't hold during market crashes. eToro felt that I'd changed my strategy, so they reduced my status from the elite investor that I'd just become and moved me down to champion, which this is not a criticism of eToro. I completely understand why they would do that, because at the end of the day, they're there to protect the investors.
Well, let me put the other side of that. You're an investor. You've done your analysis. You think the market's ripe for a significant downturn. You're protecting your assets and those of your copiers. Do you not think you were unfairly treated?
Part of me does feel like that, but like I say, I think I can completely understand why.
I asked that question in the environment where we see other PIs' behavior going unmentioned, untouched, unremarked upon, where that PI's behavior is considerably more egregious or risk-taking or worrisome than, in many ways, what you did.
Well, that's it. Like I said, as far as I was concerned at the time, and still am, really, what I was doing was in the best benefit to the benefit of my copiers. I felt like that was the safest thing to do. But like I say, at the same time, I can also see it from eToro's perspective, and because of the reaction of so many of my copiers, and so much of the public on either Facebook or eToro, I can absolutely see. I think it was the best thing for eToro to do.
All right. So there's another point to this that I'd like to talk about, which I hope you don't find too difficult to talk about, but it's something that we can have in common. And that is, in one of your videos, you mentioned that your dad had died just prior to this event happening. Although you say that that had 100% nothing to do with your decision to sell everything or the decision to buy back in again shortly after. But decision making during a time of bereavement is a subject worthy of discussing, I think, because I recently experienced bereavement in the death of my mother, and I'm still grieving 6 months on. And I've witnessed among my siblings and indeed myself that, in the fog of bereavement, behaviors and decision making and priorities can all take on a strange kind of element. Your mind can be pulled in different ways, I think, because you're influenced to some extent by grief and confusion and pain, and it can be a discombobulating experience. Do you still today look back at that time and think your decision making was 100% free of any influence from that happening in your life?
So yes and no. So first of all, sorry for your loss.
Yeah, likewise.
But with regards to my decision to close the positions, and really kind of like the main reason why I mentioned that particular thing was more because of the fact that at the time I was up in Edinburgh, and my dad was living down in Somerset. So it was more I'd had to drive all the way from Edinburgh down to Somerset for the funeral, and then I was on the drive back, and it was like, I know that I'm not going to be talking and posting anywhere near to what the level I should be when I'm making such a big decision that's affecting all of my copiers. I kind of wanted to reassure people that I wasn't just not caring. I wasn't just, making this decision and just going, but I'm not going to talk to you about it. It was there's a reason that I've not been able to communicate out to you guys as much as I wanted to. And yes, absolutely, the loss of a parent can really affect you emotionally, and it can make a lot of your decisions impacted in that way. Now, the thing is, I didn't have a very close relationship to my dad. He wasn't really there raising me. So although he was a parent, it may not necessarily have had the same relationship as a lot of other people do with their father. So although I was losing a parent, it wasn't necessarily as impactful as maybe your particular loss would have been.
Yeah, no, I totally understand what you're saying. Yeah.
But then, obviously, like I say, afterwards, because of all the kind of reaction from everybody, I was like, am I being unreasonable? Am I blocking this out? Have I made this decision based on an irrational mind? Have my feelings affected me more than I realize? And I think the issue is then that they then did start to affect me, and I did then start to make decisions that I maybe with a completely sound mind, with hindsight now, looking back, I probably wouldn't have bought back in again. But I think that's not necessarily purely the emotion of losing my dad. It was the kind of second guessing myself, and the whole kind of confusion of, because of eToro demoting me, because of the public reaction, because of my second guessing myself and worrying about how my emotions had affected me. Now, having said that, is there a chance that if all of those things hadn't happened, that I may have bought back into the market? Yes, there is. I at the end of the day, a lot of the things that I was seeing in the market, there was still plenty of stocks going up, and I couldn't find a way of making money when the market was coming down. So for me, the past 18 months with regards to investing have been absolute hell. I've not been certain of anything whatsoever, because for me, I've been looking at the market going, it's falling, but the only stocks that I can see are falling are either growth stocks that I would invest in and I think are good investments, or really bad companies that I can't short because they're either blocked by eToro from shorting, or they're value stocks which are going up in value. And then obviously at the start of, the end of last year was then when the bigger cap stocks like Tesla, Nvidia, and all of those other stocks then started to fall with the NASDAQ. So it wasn't then until the denial kind of blip that I actually finally kind of realized, actually, now the rest of the market is finally catching up.
Okay, we'll get into some of the more recent history a little bit later, but I thought it was just important to sort of deal with that sort of central issue, I think, when it comes to the Wayne story. So thank you for answering that the way that you did. Let's just snap back to running through some of these things that we always do in this section. Your risk score, Wayne.
Yes.
As we see with all PIs, the risk score has been edging up in recent months. Prior to that, you were a pretty solid average and max 5 kind of guy. How do you feel about your risk score? Is it fair today? Is it fair generally?
So, I mean, anyone that's been following me since 2020 will know I've got a very much love-hate relationship with the risk score. I multiple times have hovered close to or peaked over the 7 mark when we've had volatility. And that was in February 2020. Why I gained PI status and then lost it within the month is because of the fact that then volatility hit with the drop. I've constantly had that battle, and then end of 2020, I basically decided that the best thing for me to do regarding my PI status and the account was I needed to focus on keeping my risk score as close to the top end of 5 as possible, so that when I had any kind of volatility, it would push up into the 6 and wouldn't kind of go over that 7 mark. And so that's kind of where I'd sat for pretty much all the time up until the last 3 months. which, like you say, has then pushed it up a little bit higher. My only thing about this month in particular is I'd always been under the perception that the risk score was based on your volatility of your portfolio, which historically it seems to have been sort of stuck at that. However, on the 1st of June, the volatility for my portfolio and for the whole market was actually not particularly high in comparison to other months, and yet it still came out as an average of 7, which says to me that they do use historical data, which on the flip side then is quite frustrating to me, because I think eToro, they won't give you any kind of forward guidance on your risk score. So they can't go to you, oh, tomorrow your risk score is still going to be 7 with the current portfolio. Yet it seems to be that they will know that it will be 7. Does that make any sense?
Well, I'm not really sure what you mean when you say they use historical data.
So on the 1st of January, my volatility, I think, would have maxed about 3%. I don't think it went particularly high or low, like either way. And yet the risk score for January automatically went out as 7.
But what happened during the course of January?
Sorry, not January, June. Sorry, my apologies.
But, I mean, isn't it forever in flux, depending on the volatility of the assets and what they do day to day?
That's what I mean. That's what I thought. But the fact that on the 1st of June, after just one day, so you would expect the risk score to be almost set on whatever the volatility of the 1st of June. For June, on the 1st of June, it should really be whatever the risk score is for the volatility of that one day.
Yeah.
And like I say, on the 1st of June, my volatility, I think, was about 3%. It wasn't particularly high.
And it spiked on day one.
And yet it still came out as a 7, which for me, it doesn't seem like they are using that rule, which means they must be using historic data, which is fine if that's what they're going to do. But surely that means they should be able to kind of give us a bit more of a forward warning.
Perhaps someone can comment in the YouTube version of this chat if they can explain that particular issue. For now, let's jump over and have a look at your copier numbers and assets under management. Currently, 78 copiers, assets under management between 50 and 100,000. At the height of your performance in eToro, when you're getting these big triple-digit years, what was your highest number of copiers and AUM?
I couldn't tell you the actual number of copiers, but I know my AUM was just over 1.5 million. And that was at the start of 2021.
Well, your copiers must have been like several hundred, right?
I believe it was a good few hundred, yeah.
And do you feel you're at a bit of a low ebb at the moment then with copier numbers and AUM?
I mean, absolutely. I mean, if I was a copier right now, I probably would have abandoned myself. So you know, I absolutely I can't criticize any of my copiers for leaving me. I've got a few. I mean, the thing is, what I would say is, I think in April, my copy trade almost hit the 50% stop loss. And it pretty much kicked everybody out.
Right.
So I had a number of family members who are copying me as well. And it obviously kicked them out. So I was like, I had to get them to rejoin again. I was like, so because at the end of the day, I've got faith in myself now. I know what the market's doing, and I know, you know, to them, I'm like, you're safe to get back in and invest. But as an outsider looking, I'd see those losses and be like, that you don't want to hold during that period. And until I start seeing some green numbers, I wouldn't blame any copier for not copying me. I'm not sure about June. I think we might still end up with the dead cat bounce. but I'm confident for the rest of the year after that.
It's funny to hear the expression dead cat bounce from a man in pink cat ear headphones. Just a little breather here to let you know that soon I will be making some episodes exclusively available to supporters of the show. As a thank you to those who've already signed up on patreon.com/copytradersclub, and to encourage you to take the plunge. This will become more of a feature. Episode 20 will be a solo episode discussing whether eToro and the world of copy trading is perhaps much smaller than you think. We will consider what might be going on with the SPAC and whether eToro is making any money. And also why my faith in eToro is shaken, and what I would suggest they could do to build trust, the essential component for any financial institution. That's all coming out on episode 20 on the 17th of June, only for supporters of the show who contribute a mere $3 a month, the price of one cup of coffee. Future episodes this season with returning high-profile PIs will also be exclusively for supporters of the show. I plan to drag some big names back in and ask them tricky questions like why they've done so badly and upset their copiers, and even whether they deserve to be at their salary level. So an increasing amount of content will become for supporters only. You can do the right thing and join that exclusive club today. Patreon.com/copytradersclub. Now back to the show. Okay, Wayne, turning our attention now to your portfolio. ETFs almost 90%, stocks a little over 10%. Unless anything has changed since I did my research a few days ago. And that accounts for 100% of your invested amount?
Yes, sure, yeah.
23% available cash balance.
Yes.
Okay, so your 7 ETFs are your top 7 positions, and they're all short ETFs. I'll just run through them now quickly for the listener. SQQQ, 3 times short of the NASDAQ. SRTY, 3 times short of the Russell 2000. SDOW, 3 times short of the Dow Jones Industrial Average. SPXU, 3 times short of the S&P 500. And then there's 2 no leverage shorts. STS, which is the S&P 500, and SH, which also seems to be the S&P 500 from what I can gather. And then SCO, 2 times short of crude oil. So, first thing to say about that is 5 of your ETFs are leveraged ETFs. And I've heard you say before, and I see it on your website, no leverage, I don't use any leverage.
Yes, absolutely. So one of my main reasons why I don't like to use leverage is because when you use leverage on eToro, it's very easy to hit stop losses. With the fees involved, it makes it not worthwhile. I've had so many positions that were leveraged that have dipped, hit a stop loss, and then bounced back up again. When I wouldn't have closed it, but because of the fact that it's a leveraged position, it automatically closes. And so for that reason, that's why I've never used leverage on eToro. Now, the difference with the indices is that the indices, in my opinion, they don't move high or low enough to justify not using leverage. So with regards to, for example, with the NASDAQ, I wouldn't just hold a NASDAQ position without leverage because it wouldn't provide the volatility that I would need. So obviously with regards to my bio, where I say that the 100%, now obviously all of these, the leveraged ones are there for that reason. It's because of the fact that to get the 100% return, that's the only way that will happen. Does that mean short-term volatility? We're going to suffer a little bit. Yes, absolutely. And also the way that the assets move it doesn't react the same way as leveraged assets do for stocks. If I opened a short position on Tesla, for example, it could easily, if I use leverage, it could very easily just have a little spike up and hit stop loss. SQQQ, even if we do have a spike, it's not going to hit some sort of stop loss that's going to close out the position. So yes, a short position is always going to be dangerous because of the fact that you're more likely to go up than down long term. There is that danger and there is that risk with those short positions. However, by my calculations, it's worth the risk.
On the point of shorting, I also see this sentence on your website: never short unless we move into a complete bear market where all stocks are falling, like the dot-com bust. If that happens, all long positions may be closed in favor of shorts on bad companies.
Yes.
But this will depend on market conditions.
Yeah.
This would only happen in a complete bear market where all stocks are falling. So some of that is reflected in your portfolio, but you've still got long positions on stocks at the same time as having these shorts.
Absolutely. And the same with the COVID crash. So back in 2020, when the market crashed then, I did still have a long position. I think at the time that one was Tesla. Generally speaking, I don't like hedges as such, but these longer positions are more just to kind of try to smooth out volatility a little bit. Reducing risk score and reducing volatility is really the main reason that they're there. At the end of the day, all of these companies are companies that I think are going to go back to the price that I've purchased them at. So their long-term positions, I've slimmed all of them right the way down from what they were. Most of them were sort of like 5 to 10% of my previous portfolio, and obviously now they're down to 1 to 2% at maximum.
Right. The other thing on the leveraged ETFs is, as you say, there's no stop losses set, and you're sitting on these for many weeks. Are you happy that that's a sensible policy with instruments like these? Are they not meant to be traded in and out of?
Yes, I am comfortable with that. And the reason being is that I am confident that the market is going in that direction. My window for these is more kind of like 6 months of how long I plan to hold these. Obviously, it depends on the market conditions at the time. They are mainly used for kind of like shorter term positions, but I do believe that the way that I'm using them is the most sensible option at the moment, considering the market conditions.
Yeah, so you're obviously very bearish at the moment.
Yes.
Most of these shorts were opened in May, which is last month. We're recording this early June. And you'd already sustained a couple of heavy losses this year, January and April.
Yes.
In the Quickfire Questions, you mentioned a book, your favorite book. You've also made a video about that, What I Learned Losing $1 Million. This book can stop you making the same mistakes I did. A couple of days ago, I had a couple of credits to use on audible.com, and I downloaded that book, so I'm listening to it right now, actually.
Oh, okay.
Such is the power of your influence, Wayne. Now, in that video, you sort of reference one of the points in that book, which is that you admit it could be that because you enjoyed such great success in those 2 years, 2019 and 2020, you sort of now convince yourself that, you can't go wrong, because that's a lot of what that book talks about, isn't it? Is if you personalize success, you can think you're a genius and it can lead to your downfall.
Oh, yes, absolutely.
So do you think that because you so successfully timed the market in COVID 2020 era, that you thought you could continue to do so? And since then, you've got a few of the market movements wrong a few times, it's fair to say?
Yeah, absolutely. I mean, the thing is, I wouldn't say that I'm overly confident because of the fact that I did it last time. At the end of the day, the fact that I've had such a bad 18 months, I think that's kind of stopped any kind of overconfidence as such on my part. I think if we were back in February of last year, where I was still kind of riding high, potentially I could be still making a decision based on that kind of success. But I think the fact that because I've had such a terrible 18 months, that it's like I don't feel like I'm making this decision because I'm such an amazing guru. I'm making this decision based on the fact that I'm looking at what lots of other credible investors are saying. And obviously there's plenty of people that are saying we've got a bear market, and there's plenty of people that are saying that we've not. And in my opinion, the people that are saying bear market have far better reasoning and far more logic behind what they're saying. I'm backing up my opinion with what other people are saying, rather than necessarily just being like, I'm this great guy that knows all. I did it last time, so I can do it again.
Also, harkening back to your quickfire questions, you say your hero is Warren Buffett, and I think it's fair to say your greatest success came when you zeroed in on a small number of high conviction stocks.
Yep.
And sat on them.
Yep.
So it strikes me that since then you have been trying to time the market over and over again. Would you ever consider a strategy that doesn't depend on timing the market?
The issue I have with regards to timing the market is, if, say in February last year, when I sold everything, if I'd have kept all of those positions and gone, I believe fundamentally in these companies, we're going to be fine, I would probably have around 20% of my equity from there left over, because a large amount of those stocks have done very, very badly. So generally speaking, I do agree. But I think obviously, for example, Warren Buffett is very much a value investor. So he will find stocks that are undervalued, and he will hold those, which for his style of investing is exactly what he needs to do. I look at him as the pinnacle, almost the guru, more in the regard of the way that he invests and the way that he looks at companies, rather than necessarily just being a buy and hold investor like he does. Because of the fact that my target is to be the best and to have the best returns. If I was just going to do what Warren Buffett does, why invest in me? Why not just buy Berkshire Hathaway? Part of that is that I need to invest in growth stocks. And that's my passion. That's what I enjoy. That's what I find interesting, is those kind of companies. And if you invest in those kind of companies, then just buying and holding through crashes is some of the worst things you can do. I mean, for example, if you look at Amazon, before the dot-com crash, if you'd have gone, I think Amazon's the future, I'm going to buy and hold them, and then you kind of bought them just at the pinnacle of the crash, you're then waiting quite a long time. I can't remember exactly how long it was, but I think it was like 7 or 8 years until Amazon came back up to its original value. As an investor, not only do I not want to see that with my own funds, but as a popular investor, I don't want to do that with other people's funds. I don't want to take a load of people's money, lose it, and then wait 5 to 10 years to get it back again. So that's why, as far as I'm concerned, when you hit a bear market, that's why you kind of get out. And my struggles over the past 18 months has been because of the fact that, like I say, I've seen a bear market. I've not been able to do anything with it. I've been trying to kind of invest in long positions when I don't really know when I can time this right. Not in a regard of trying to time the market, but simply a case of, can this fall any further, because all these other stocks haven't started falling yet. I've had a few positions where I got in and out of Peloton because of that. Like, obviously the past 12 months before the last 6 months. So from February, 12 months on, there's been a lot of rotations going through different markets. Because of the fact that the overall market hasn't crashed, it's then a case of, right, so if the market as a whole isn't going to crash, these stocks should recover. And it's until the whole market crashes that you then realize that they won't recover, they will crash down even lower. So like Peloton and Fiverr, as much as I think of them as great companies that are going to do well as far as the business goes, I couldn't touch the stocks because I think even now their price is probably still going to fall another 50 to 60% off of current lows.
Yeah, well, let's talk about Fiverr, because that's one you mentioned. Back in August 2020, when Fiverr was at $144, you predicted a very bold price target. Do you remember how much?
4,000?
No, $1,140.
Right, okay.
And then you made an update post when it was at $334, and you were saying, look, we're well on our way to my target. Now, I know it's hindsight bias and all that, but Fiverr is now $43.
Yes.
But your price prediction was for 3 to 5 years' time, so there's still a couple of years left in that. So shouldn't you be remortgaging your house and putting it all on Fiverr at this price?
Absolutely not. No, no. Like, at the end of the day, so I do try and caveat any prices that I make, and I don't know whether I necessarily made it clear on every one of those videos. It's always dependent on current market conditions. So if we hadn't have had the crash that started in February of last year, if all sort of stocks had kept the price multipliers, the price to earnings multipliers, if we'd have kept that standard, then there's a good chance that Fiverr would have reached that price. And I don't mean because of the fact that all stocks were just going to keep going up and up and up, because they wouldn't have kept on at that trajectory. But that price to earnings multipliers and the growth in that regard. So yeah, I think if the market conditions had stayed as they are, then we absolutely could have seen that price for Fiverr. Now we could be talking 10, 15 years before we reach that price. If in fact we do.
Well, I would take that 10 years, buy now at $43, and in 10 years' time it's $1,140. Let's just pause the interview while I go and open a position here. That sounds absolutely brilliant.
Yeah, like I said, I mean, it's completely dependent on market conditions at the time, like obviously we've not even hit a bottom yet.
Difficult to make 5-year predictions based on current market conditions, though. I mean,
absolutely. I mean, at the end of the day, the price targets that I was basing that on is based on what I'm expecting their sales, revenue, and earnings to be. And if, for example, I'm expecting in 5 years' time for it to have increased by 500%, then in theory, you should expect the price of the stock to have increased 500% by that point, as long as it was going to still continue growing at that same rate going forward.
I suspect Fiverr is a good shot at the moment, but that's just an opinion.
I'd hold off buying for another 6 months if you are interested.
Okay, not financial advice, of course, Wayne.
So obviously.
Let's shift gears and talk about your Facebook group. You run a Facebook group called the eToro Community Group. Link in the show notes.
Sorry, I just want to correct, because although I created the group, it's absolutely not my group. It was created purely as a community group. So at the moment, we've obviously got a group of admins managing the group. If at any point people were like, we don't want you as an admin on this group, I would leave and anyone else could take over. The point was simply to have a more user-based discussion on the rules for the group.
Is that guy Enda Trading one of the moderators?
No, he's not, and he has now been. We've asked him to stop posting. We've sort of temporarily stopped him from posting, yeah, mostly because of the fact that he didn't necessarily contribute to the group. And I've had a discussion with him now, and he said that he's going to try to contribute more. But that was mainly our issue. Is we don't necessarily, as a community, have an issue with people self-promoting on the group. It's more that that's all he was doing, and he wasn't actually involved in any discussions or any other posts. So
yeah, there's a lot of his videos posted on the on the group, and the listener may have come across some of his videos. He's the guy who sounds a bit like this. Welcome to copy trading eToro, okay? I'm going to copy someone with $10,000 using the virtual account, which is definitely 100% accurate, etc. So I'll be copying Rudy Emza, which sounds like an African surname. Emza, okay. Peace and love. Sign up for eToro. Link is in the bio.
I love the addition of the Irish accent on top. It just tops it off.
Now, I mean, all of his videos are meant to encourage people to click his affiliate link, you know? I mean, I'm no hate or anything. Everyone's got to do their own thing. But isn't that the result of eToro incentivizing third-party content only via affiliate sign-up links? That means people will only produce those kind of videos, intro to eToro, aimed at people who don't have a clue where to start.
Yeah, quite possibly. I mean, I wouldn't say I've necessarily done a lot of. I've not really looked at a lot of his videos, so I wouldn't be able to tell you much regarding what he does. And yeah, I mean, obviously, there's the videos. I've done a few myself of how to get started on eToro, how to do X, Y, and Z. So
well, there's millions of those out there because that's exactly the video you make for people to click the affiliate link, right? But eToro offer no incentive to anyone who wants to create content useful to people already on eToro.
No, they don't. Yeah.
What use is an affiliate sign-up link to me? Absolutely useless. People who listen to Copytraders Club are already eToro users.
Yes. Yeah. Absolutely. But I guess the advantage for eToro as a popular investor is like people like myself. If I'm making content, then people are more likely to copy me. And I guess maybe that's more the angle that they're going on, is they'll get PIs to make the content, because then it's like, come to eToro and copy me. I'm assuming is their angle.
Yeah, probably. We haven't mentioned your individual stock positions, so let me just refer to those now for the listener. You have 6 individual stock positions, all of which are between 1 and 2%. As you mentioned, they're all pretty small. You've trimmed them way back. They are Games Workshop, Nvidia, Tesla, John Deere, Agnico, Eagle Mines, and Walt Disney.
Quite an eclectic mix.
Indeed. And let's talk about the desync issue. There's very little desync in your portfolio. The only place it really exists is in those individual positions, but as we say, they're so small that the effect is quite minimal. Is maintaining synchronization very important to you?
Absolutely. At my height, back 18 months ago, I had plenty of discussions with copiers regarding regularly doing portfolio resets, and it's absolutely something I think PIs should do if they start to have positions that are doing well or particularly badly, and it's desyncing the portfolio. At the moment, I'm not particularly concerned with doing it because of the fact that I'm not really getting any new copiers. Possibly 2 or 3 copiers over the past 12 months that have joined. And most of those have exited shortly after. So I've not had any new copiers So there's not really necessarily been any reason for me to perform proper resets to sync up my portfolio. However, when the market does start to turn again and I do start to perform better, then yes, I will be doing resets and making sure that the portfolio is synced.
These next couple of questions might be a little bit strange to ask, given what you've just said, because of your more recent performance, and copiers don't tend to be joining. But let me ask you the question, and you can answer. Who should copy waynewes?
Who should copy me? So if at the moment, if you're expecting the market to go down, then absolutely, that's pretty much what my portfolio is designed around now. So as long as you're expecting the market to fall over the next 6 months, then absolutely. If you're okay with seeing volatility in your portfolio, because if you don't like volatility, then I'm absolutely one of the worst people to copy. Even at my height, even in 2020, when I had all green months and 275% or whatever it was for that year, there was still months where my portfolio would have dropped, I think maybe even 10-15% in 1 month before it recovered. So, and there's plenty of copiers that I had then at that point who would start copying me right before a dip, and then would end up closing their copy at the bottom of the dip. So even though I made those ridiculous gains in 2020, I had lots of copiers that lost money for that reason. So if you don't like volatility, absolutely don't copy me. Really, the fundamental reason that if someone's going to copy me is they need to trust in me. Looking at my stats over the past 18 months, it's very easy for someone to look at that and go, no, absolutely not. In that regard, I would say if someone is interested in copying me but not sure, they should watch me, read my posts, and wait out. Because, like I say, I'm confident in the next 6 months that my stats are going to completely turn around. But I can absolutely see why, at the moment, someone wouldn't trust that at all. Because I, as an outsider, without knowing myself, I wouldn't trust myself either. It's only because I understand my own mindset and I understand why over the past 18 months I never was going to have made a profit, because the market conditions were not right for how I make money. Roughly every 4 years or so, we end up with an economic cycle where you have a big crash, you get a peak, and then you get a crash. And at the top of that peak, when you have the markets rotating and people are desperately trying to find how to make money, and you cycle through all the different markets, that's the one period of time, in my opinion, that I've never got any chance of making money. So when we get to that stage, I'm always going to make a loss.
Yeah, I should have maybe mentioned this earlier, Wayne, but kudos to you for coming on during this time when you're not exactly standing on top of the mountain. It's very easy for people to come on when everything's rosy and, sit back and say, yeah, look at my amazing results. Aren't I wonderful? So respect for coming on to discuss everything, even though things aren't too rosy right now.
Cool, thank you. Like you say, at the end of the day, a lot of copiers, their main kind of focus on coming to you could well be, self-publicity. And obviously an element of me coming here now is absolutely self-publicity. I guess it pretty much is only going to be self-publicity. I guess is there any other reason? But no, I mean, I enjoy talking about stocks, and I enjoy talking about portfolio in the market. So, at the end of the day, I think you need to own your losses when you're doing terribly. You need to acknowledge it, and that's an important part of personal growth.
Well, here's another question I like to ask PIs at this stage, which kind of goes beyond the immediate results, I guess, and that is, What makes you so special?
Well, I mean, I've always been told I'm special, so um, I think I've got quite a different way of looking at the market to a lot of other PIs. You get a lot of people who are very fixed on either they just buy and hold and go through the market like the warrant investors, and most of the successful PIs on eToro are just buy and hold investors, and they'll have a very varied portfolio. And if that's the kind of investor that you're looking for, that's absolutely not me. For me, I'm all about looking at the growth model, looking at the businesses that are going to grow, and trying to make money in all market situations. So I'm not. A lot of people talk about timing the market. For me, there's two different types of timing the market. There's people that are kind of catching each little up and down. There's plenty of times in the market where the market's dipped sort of 10, 15, 20%. And I've not tried to time those really. Like, obviously, I'm constantly in and out of positions, but that's not really my aim. I'm not trying to kind of catch those little 10, 20%. It's only when the market collapses in a big, once every sort of 5 to 10 years kind of way that I then change and start to short the market. So I'm not timing the market from a daily, weekly, monthly perspective. It's over a longer period of time. That's what makes me different. I think I don't really see many other investors who are long-term sort of buy and hold investors that time the longer cycles.
Okay, what are the major changes you would like to see on eToro? If you could wave your magic wand and make a couple of big changes.
I think that's quite a difficult one, because although I'm not in any way saying that eToro is perfect, because there's plenty of bugs, there's plenty of issues. I think the issue with coming up with better ways is often that any kind of change you make will have a negative connotation somewhere else. I'm not necessarily sure there's any one big thing. I think I'd like risk score to be clearer. So being able to kind of understand what your risk score should be from your current portfolio would be an important one for me, because, like I say, now that I'm an average of 7, I have to close some of my positions. I have to reduce my volatility as a PI, and I don't know how much to close to get myself down to the right level. So I could end up closing stuff that I don't really need to close to bring my average down. So it'd be good having a bit more of a clearer kind of risk score calculator as such. I think would be very helpful. That's probably the main thing.
What other PI would you say you know best on a personal level?
I wouldn't say that I know any of them, actually.
That's a very common response.
The only person that I've chatted to J Nemesis a tiny little bit, and I've chatted to a couple of investors in like passing, and to the stage where I couldn't even tell you what their actual name is, through the Telegram group, and all I'll see is their name on the top there, which often isn't even their eToro name. So it's like I don't even know who you are, or as such to link you.
Is that something you regret? Would you like to get to know a few PIs?
I don't know is the honest answer. I mean, the thing is, I'm not a hugely social person. I'm not a very good chatter as such. So I'm good at like having a discussion about a specific element. But when it comes to any kind of friendship of like side chat, I have no side chat. So.
But do you not feel like we're becoming very good friends here, Wayne? Right before the listeners' ears. Okay. All right, now final question. What's the one question you wish I had asked you that I haven't?
I really don't think there is any, because I think any kind of point I've wanted to make, or anything I wanted to talk about, I think we've spoken about. Possibly the only thing is, obviously we touched on the Facebook group. I would possibly say that discussing the reasoning for creating that may have been a bit more something I'd like to have discussed a bit better. Purely because I think when I originally created it, I also had quite a lot of emotion from what was happening. And I think the way I communicated out may not have necessarily portrayed the message that I really wanted it to. So do you mind if I just sort of touch on that a little bit? Yeah. So basically, obviously, the other Facebook group, that I can't remember the actual name of it, but I'm sure everyone knows it. I was on there as an admin, and for me at that particular time, it was a very important part of my daily routine. Like I was always on there, always chatting to people on there. And people were being kicked off for various different reasons. And also if people needed help, they were told to contact eToro support. And that's not what the group was for, which, is fair enough. But I kind of felt, how would I feel if, as an eToro user, if I was kicked out of that group? All of this stuff that's happening, all these discussions that I'm missing out on, I'd hate that. I wouldn't feel it was fair. And then when something happened that kind of pushed me a little bit too far, I was like, right, okay, I can't keep with this. I need to create a space where anyone can go. And if people want to ask questions, they can. That wasn't so tight on the rules. At the time, that's what I intended to do. And that's what I said to the admin group. And then because of the fact that then that meant I was kicked out of the group, it then obviously triggered a lot of anger in me, because, like I say, it was quite an important part of me. I was on the group a lot, chatting. So it may have come across a little bit more negative than I was necessarily intending. And I don't know if that makes any sense or if I've just waffled a lot last couple of minutes.
Well, so you were part of a group, and then you wanted to create another Facebook group that did more for the users than you considered the original group was doing, right?
Yes, to an extent. I just a little bit more of a safer environment where people weren't at risk.
Yeah, I know the group you're talking about, and I think I'm still a member of that group. But yes, it's run by some guys who sort of are very restrictive of what can be posted and who can say what and to whom. And yeah, it doesn't seem like a free marketplace of eToro ideas to me.
Yeah, no, exactly. And that's all I wanted was more to create something a bit more. Now, the thing is, at the end of the day, the reason that group is so successful is probably because of the fact that they do restrict the chat and such. So there's a good reason why it's there. It's just for me, I wanted other people to be able to be involved without the risk of being kicked out. Unfortunately, it kind of then triggered a bit of a war between the two groups, which wasn't actually the original intention, and it ended up then with people being kicked out of the other group because of the fact that they were participating and a whole load of issues.
Facebook drama.
Yeah, exactly. So yeah, we do seem to be past that. So I'm not trying to drag anything up, but it's more just like I think a lot of hard feelings were caused probably from stuff that I said because I was so angry and frustrated at being kicked out of the group, and so yeah.
Okay, well, your journey both on Facebook and on eToro has been nothing if not eventful.
That's one way to put it.
Well, it's been very interesting to hear your story. You're one of the characters who has experienced all the gamut of emotions, I would imagine.
Yeah.
And I'll be looking forward to seeing how you go in the future, whether the markets move in your favor, and if you can get back to those dizzy heights of 2019 and 2020 again.
I sure hope so.
Well, thank you very much for gracing us with your presence here at the clubhouse.
Thank you. And thanks for the tea.
Yes, the delicious tea. Cheers, Wayne.
Thanks, Ed. Bye.
My thanks to Wayne for sharing with us all his eToro highs and lows. We will watch with interest to see what twists and turns his fate has in store in the future. If the past is anything to go by, it certainly won't be boring. That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, no financial advice. Do your own research. This is just generic chit chat. We don't know your individual circumstances, etc., and so forth.